Hi everyone and welcome to Infinox Market Insights with me, Richard Perry, analysing markets for Infinox on Monday the 6th of December. Now into the new trading week and moving to the European session, we've got a tentative risk rebound coming through with the suggestion that the People's Bank of China might be on the brink of cutting the reserve requirement ratio. That may be playing a role there, but it's interesting that we've got a bit of a kickback rebound on the non-farm payrolls report move that we saw on Friday. It seems as if, despite the fact that payrolls are worse than expected, the US dollar eventually held out as a strengthening play, and into the close the risk appetite was really sharply quite negative, and what we saw over the weekend in the cryptocurrency world was quite a significant sell-off there as well. So it would be interesting to see if this rebound on risk appetite plays out into any serious momentum. Now what we do have is this move that continues to see the dollar strengthening, and indices are fairly sort of choppy at the moment. The volatility is still a key factor there. So news flow again around Omicron remains something that markets will be looking out for. Now there's no real data points of any note today, so markets are going to be sort of on their own really, because also the Federal Reserve is now into its blackout period as well, ahead of the Federal Reserve meeting of the Wednesday next week. So the charts we're looking out for today, I'm starting with the Aussie dollar. Continues to trend sharply lower, but in the sense that there's a little technical rebound today, but is it a buying opportunity or just another sell-off coming down the road? And we're also looking at the gold price. Well, gold ticked higher on Friday. Is it the chance to potentially see a bottom on gold? And finally, we're looking out for the FTSE 100, which is coming up against resistance. So let's have a look. And moving on to the Infinox MT5 platform, starting off with the Aussie dollar. And we can see that this decisive downtrend move that we've seen in recent weeks continued on Friday. Sharp downside move, really big risk appetite sell-off seemingly into the close. And we had this support at 69.90. This is a really quite a key historic level, actually, going back to November 2020. Market picking up from there today, but I've been looking at these key supports on the Aussie dollar recently, and this one here around 71 figure didn't really hold, and it held initially, then ticked higher and fell below it, and then sharply down. So bearing in mind we've ticked higher this morning, it's not really anything you can go on. I mean, the technical rally from 21 on that RSI deeply oversold, but is it really anything to trust? Well, looking on the 4-hour chart, it's just a tick higher, isn't it, really? Nothing really decisive, not really building anything there of note yet. No real signals on even on the hourly chart that we've got any buy signals yet. So essentially, you're still looking at this, I think, and saying, well, this has got to be falling away. The prospect of a technical rally is really quite dim on this one at the moment. I was playing out for the potential of a technical rally from this key support, but it never really took hold. And then this downtrend kicked in once more. So I'm still having to play this downtrend, I think. And the gold chart, well, gold again fell below support around the 1770 mark, closed below that old uptrend. Now, you can't, in all honesty, say that uptrend is still intact now. So that's going to have to go. And I think that what we do have is that this is now playing around with this key support at 1758. How the market reacts around there is going to be important. You look on this 4-hour chart, just zoom in one more level there, and you can see that anything around 1790 to 1800 bucks is now where the market is struggling. And we've had that tick higher, but essentially, is it just another chance to give another selling opportunity on a near-term position for further testing of that 1758? Probably would be. The only thing that holds me back from that is the fact that gold actually closed higher on Friday, really sort of not far from the top of the trading range on the daily range, and that's the first time really that's been seen since early mid-November. You can't really say that this candle here 2 days, well, that was Wednesday last week, would have been considered to be that, because technical rallies seem to be selling opportunities on gold at the moment, and I think that that's likely to continue. And finally, with the FTSE 100, very choppy. Equity markets really choppy, continue to be so. FTSE closed lower on Friday, but reacted higher early in the futures today, and has continued into the European session to really now test this resistance. But this is sort of like a lone wolf at the moment. The other indices, S&P, DAX, are not really playing this game yet. And I think it's helped by the rising oil price, but FTSE is struggling now, still around this resistance, 7180 to 7200 on FTSE seems to be resistance, but there is a tick higher on that 4-hour RSI. But at the moment, I think you've still got to play this as a rally into resistance, and then maybe as a retreat play. But doesn't look as though it's decisively ready to break higher yet. Thanks for watching. I hope you found it informative for your trading. Join me again on Wednesday, where I'll be looking at the fallout from the Reserve Bank of Australia meeting, the impact on the Aussie, and also for the Bank of Canada impacting the CAD. So I'll leave you with the Infinox support and resistance table, and I will speak to you then. Thank you very much.